and welcome back. My name is Eddy Hood, and this is Dan Luthi and Ryan Steck. We are the Cash Flow Debate podcast. Today we're talking about personality clashes between the accountant and the entrepreneur. So if you've ever had an accountant work for you, and for some reason you just couldn't get the conversation to flow, you weren't getting what you needed, and it always felt like you were at odds with each other, then that's what this is about. We've worked with entrepreneurs for 20 plus years. For you, how long you been doing this, Ryan?
Long time.
I've been doing it for over 20 years. Dan's been here forever. We've been in a lot of conversations that have gone well and a lot that have gone bad. So this is going to be a fun episode just to talk about human nature in business. So with that in mind, let's get started. I'm just curious. We're accountants, so it's been a really busy week for us. It's been a busy month, actually. We just brought on a really big new client, which we're excited about. And I'm just curious, how's your guys' week been? What's been up to?
Been a busy week for me. I mean, anytime you're bringing on new clients, you're seeing new things happen. Every business comes with its own unique set of challenges. You walk into the world excited and saying, okay, I want to understand who you are. But man, it's a lot when you're bringing on a new business and having to learn who they are, their personalities, their systems, what they do. Busy week, but that's always a good thing.
Oh, absolutely. And of course, it's end of year, kind of being just the first part of the year that we're coming into. We've got some deadlines that we've had to deal with over the last little bit with 1099s and things like that. And also helping our clients get ready for taxes. It's just busy. There's always those things going on. It's nice that we don't do taxes ourselves, because I think that will calm us down a little bit in the next couple of weeks. But yeah, definitely. But it's it's just a busy week. It's one of those weeks that just kind of catches up with you when a lot of things are due.
How many 1099s have you filed this year?
Oh, I think we did 1,600 this year. So
1,600 1099s. That's a lot of government tomfoolery.
We were planning for, I will say this, the part that's good about this year compared to previous years, we only mailed out about 150 of them. So emails were sent on all the rest, which historically it was like a 1-for-1 on mailing out. And so
that's nice.
Email's a lot more efficient. People get them faster. If there's issues, we can address them quicker. It's much more of a smoother process. So
yeah. I despise any kind of government form. I absolutely don't want to touch that. They made my house the mailing address for our business because we're a virtual firm. How did that go?
We moved it from your house.
All of these state government documents were coming to my home, but I was just not dealing with it. So that's why Dan's our operations guy. He likes that stuff.
Oh, I love it.
He loves it.
When it comes to my house, my kids ignore it, so it makes it easier for me to take care of it.
Yeah, it's good. Ryan, what kind of clients have you been bringing on? You don't need to say names. What industries have you been working?
Yeah, we've been seeing a lot in the nonprofit, some of the healthcare industries. Those tend to be some things that we see. We've been working hard with a lot of our daycares right now, which we actually have quite a bit of experience there and really love our daycare businesses. So been a lot of smattering of different things, but that's kind of what I'm seeing right now.
Yeah. I talked to these guys this week about potentially attending the International Child Care Convention in Chicago in October. That'd be kind of fun. Yeah. Show up and maybe get a booth or something, like being the accountants for daycares, because we do a lot of daycares.
Chicago, I love you, but
you don't want to go.
You have amazing food. That's what you have. You have amazing food in Chicago.
I've never been to Chicago, so
Chicago has amazing food. I will agree with that. There's parts of Chicago that are really fun to go to. I mean,
we love Chicago.
What should we do in Chicago?
Eat
is definitely one of the things. I will say they've got some really cool district parts of it. Like they've got the business district that is just super busy. And I used to think I worked a lot. These people are constant.
Really?
Like organizations, like you see big headquarters for Google and all this other kind of stuff. People will go down at 11 o'clock at night to do dinner because they've been working since 7 o'clock in the morning. It's crazy.
And they're hitting deep dish.
Oh, they're hitting deep dish. Or they're going to these super fancy restaurants. I mean, like Ryan said, the food there is amazing. The food's awesome there. But yeah, it's crazy to kind of see that.
Well, I think this is going to be a fun conversation because I'm really interested in psychology and why people act the way they do. I mean, if you take just the three of us, we're three very different personalities. Like, for example, Ryan and I despise meetings. Dan loves meetings. Why is that? Like, why are people so different? I think that sort of personality trait is makes working as an entrepreneur and an accountant hard. So I wanted to start today's conversation by looking at things from the entrepreneur's perspective. So if you're watching, if you are this entrepreneur who's just financially frustrated because you've been really busting your backside and trying to make your business profitable, and you're 10, 15 years in, and it's just not hitting the goals you want, then maybe something's happening with you and your accountant. So why do entrepreneurs not always get along with accountants?
Well, let's walk this back. Should we change this to why we hate meetings or love meetings?
Yeah. Well, we can talk about that. This is technically a meeting. How are you doing?
I'm doing all right. I got 15 more minutes in me.
You're done. All right. Well, yeah. So why do entrepreneurs struggle with accountants?
We've talked about this forever. I think there's just that ideology with normal accountants that are running in a different direction than the entrepreneur is. The accountant usually is looking for what's happened historically
In the past.
and they're trying because they want to provide accurate information, reports for the business owner, and the business owner is just running as fast as they can. And there's not a lot of time in that relationship if it's very transactional in the relationship instead of built off like Ryan commented on earlier, where there's trust and there's confidence and there's understanding of. Accountants just want their stuff right. Business owners want to get information as soon as possible, and they just don't have time sometimes to be able to mesh with each other.
Yeah, that's all cute. But honestly, I mean, what it really boils down to,
Wrong, man.
I mean, it's the right answer, but what's really happening? And honestly, I feel like accountants feel like businesses are in business so that they can support their accounting team. Like that's why they went into business, so that they can have an accounting team. And the business owner is just sitting there saying, I hired an accounting team. Why isn't my stuff done? And why do I have to put any effort into this? I'm just trying to build this empire, this kingdom I've got, this idea I've got. I'm trying to build it. And all these people are is an annoyance. They're a distraction. And sure, maybe I want to know how I've done financially, but I can look at my bank balance. Oh, maybe I want to see my financials, but I just want a tax return done. Like there's a disconnect in what the value system is and what they're actually getting from each other and what the expectations from each other are.
I like how you said the entrepreneur just wants his or her stuff done, right? So let's just unpack that for a minute, because I think stuff means something different to the entrepreneur than it does the accountant. So the accountant hears stuff and says trial balances and depreciation schedules and amortization schedules and all this stuff that the entrepreneur probably doesn't really care about. But what is an entrepreneur looking for from the accountant, do you think? What do you guys think?
Compliance.
Okay. So
Like most of the time, it's like, just I need you to take
keep my
care of
nose
this.
clean.
Yeah, keep my nose clean so that I can file my taxes on time and that the IRS doesn't bug me.
Okay.
I think that's usually the relationship. And I think that's one of the hardest parts that we deal with in trying to change that ideology. And again, I know we're going to talk about this a little bit later, but that's one of the biggest stresses of firms and organizations that are trying to be different than that in a relationship and trying to be more proactive is there's still that cultural expectation that your job is just to make sure that I don't get in trouble. Do that and then don't talk to me. And I don't want to worry about everything else that you think is important in order to be able to do that. And so I think it's a chasing aspect in a lot of cases between both sides.
It's interesting. I think about a lot of people I've worked with who come at accounting simply from a compliance standpoint. Those are the entrepreneurs that tend to be more stressed and tend to not be doing so well financially. They're just treating accounting as a necessary evil so they can get back to what they like doing, But I've had a couple clients that actually enjoy the process of building wealth. They actually see that there's value in having a finance team. And so they make time to sit down and chat and kind of get clear on what stuff means. Those people are making money hands over fists, I don't know. Ryan, what do you think? What do entrepreneurs want from their accountant?
Everyone's different. And this is the whole point. I mean, some people fall in the category you're talking about, Eddie. Some fall in the category Dan's talking about, which is the compliance. And it's really interesting. I run our CFO and our controller division for our company. And people that come into my world actually care about their accounting. They actually want something a little bit more than just compliance. They're looking at it saying, how do I develop whatever it is I want from a vision standpoint? Yeah. But there's lots of people that come in and just are like, I want my bookkeeping done. And I just want my bookkeeping, your compliance, like Dan's talking about. Okay, I want someone to review my financials to make sure they're accurate. Great, because I don't want to deal with the tax accountant. And so everyone's on a different playing field on where they look at things. And everyone's understanding of the importance of accounting is actually very different. Because I always bring in doctors and dentists. They're a group I like to pick on a little bit, in that no one told doctors and dentists that they were going to get all this education. They were going to set up a small practice. These are really smart people, saving lives, saving teeth, doing things that are really important. No one told half of them they actually needed to understand business.
Right.
They went into it saying, I'm just going to be a practitioner. I'm going to go pull teeth. I'm going to go help pull people's appendix out of their bodies, whatever it might be.
I just did that, and Ryan might be doing that.
I might be.
His appendix is in jeopardy.
So, but no one told these people they needed to be business owners. And that's the hard part is a lot of entrepreneurs come in and are just like, they have an idea and they look at a bank account and say, this is who I am.
Yeah.
And there's more to it than that.
Yeah, I think that's really good. I think entrepreneurs want a specific outcome. Like I like what you're pointing out, Dan, how entrepreneurs are usually pointing forward and accountants are usually pointing backwards. And I think that's the first big problem, right? Our accountants are hired to take the data and say, here's what happened. But that means I have to draw a line in the sand somewhere and create a cutoff point, right? Otherwise, I'll never get you a report, because every day new numbers are created. So we usually pick the month end date. That's going to be our cutoff. And then we quickly rush to try and crunch a bunch of numbers to say how you did, which means we're always looking backwards. Meanwhile, the entrepreneur is trying to sell new accounts, trying to open new locations, trying to negotiate new deals, whatever it is. So he or she's always looking that way. And so it's you're by nature pulling in the opposite direction, which is a problem. It's a serious problem, right?
Very much so.
I think there's a disrespect sometimes between the two as well, because an entrepreneur looks at the accountant and says, you don't get what I'm trying to do. I'm trying to build something great. I'm paying for your job. I'm paying for your family. I'm giving you all this wonderful stuff. Like, why aren't you just giving me my report? And the accountant's going, I'm trying to get you a report, but I need this and this and this from you before I can close the reports. And I need to know that deal that you're working on. I need the loan docs from that. There's just a whole bunch of like inherent issues with this relationship, and it rarely goes well.
Yeah. I think a lot of that also too because there's so much that's involved in how a business operates and runs, right? There's the classifications, and I say the classifications from the perspective of if a business owner is trying to understand what their gross margin is, like they think of labor costs, they think of product cost in most cases. And the accountant's on the other side saying, well, there's merchant fees and there's marketing spend and there's all these other things. And there's just a really big lack of understanding between the two on what actually is those margin associations and really how well the business is performing on what it's trying to do. Also with that too, transactions are just happening throughout the organization because they're trying to run, they're trying to move, they're trying to keep everything going. And the accountant, because they're not the one swiping it, doesn't know what that was for. And I think that becomes one of those pieces of this is why accountants have to start thinking more proactive as a whole, because if you can get ahead of the relationship, that you can get the client or you can get the entrepreneur what they're looking for a lot faster because you've actually determined together what the expectation and journey is going to be along the road. And I love that technology is allowing for that. We've had a lot of change over the last, I would say, probably 3 to 5 years with technology in the space of being able to craft those kind of relationships. But it takes willingness from both sides to be able to jump headfirst into change.
But it's interesting, if you read between the lines of what Dan just said, and this is really important actually, is yes, as accountants, we are constantly frustrated by entrepreneurs who are coming in and don't want to give us the time of day. But ultimately what Dan is talking about is, as accountants, a lot of it's on us because the entrepreneur can just go find another accountant, start with someone else, do something else. It's their business, their idea. It's actually up to us to try and build some value for that person so that they actually want to talk to us. And that's kind of the disconnect we find too often is that you get that compliance attitude of, okay, here's another person that needs their accounts reconciled. Here's another person that needs their reports. Why should the owner care? And so it's kind of up to us a little bit to say, look, this is why you care. Let me give you something that means that's going to actually be impactful for you and is actually going to help your business.
I think too, the accountant learned in school all the reports he or she should create, right?
Mm-hmm.
I got to do all of these wonderful, complicated reports to close a set of books. And so we just erroneously assume that those are the reports that you as the entrepreneur want and need to see. But you weren't trained in those reports and you don't care about them at all. You care about sales figures and, I think it'd be really valuable if the accountant could master the skill of saying, before I do any work, like what's important to you in your business? Like what do you need to see to make better decisions, right? Because I can craft my reports to meet those needs. Too often, I think we just export stuff out of QuickBooks or dump it into Excel and say, here's your balance sheet, good luck. No wonder everybody's frustrated, I think about like what I need as a business owner, for example, to help run our firm, and what you guys need, the numbers that you need. Like Ryan, you need different numbers than I do to make decisions about what we're doing. And so do you, Dan, right? Like the way that the three of us look at our balance sheet is different. It's the same report, but we're looking at it in a very different way. And if any one of us owned this firm individually, then whoever was doing the accounting would need to tailor it to be that way, So I think that's important. The accountant needs to ask, what are you looking for so that I can build it? But I think there's a lot of weight on the entrepreneur too, because the entrepreneur needs to be prepared to say what he or she's looking for. More often than not, they go, I don't know what I want, right? Mm-hmm. And all that means is that's okay. It's okay that you don't know, but you need to take some time and think about it. You need to sit down with your sales team and your operations team and say, okay, everybody, what are we actually trying to measure? What do we care about? I got a new accounting team. They're going to help us measure some stuff. But let's get clear on what we want first, right? You can't get mad at your accountant if you don't know what you want. And accountant, you can't get mad at your client if you don't know what they want. So,
but I also think to add to that, and I agree with everything you're saying, it also ties back to the comment Ryan made, which is the accountant, I still think, is the one that has the most ownership in that position, because they have to be able to meet the client where they're at. Yeah. And it doesn't mean that you ignore the compliance aspect as an accountant, but the accountant has to be willing to have the discovery conversation. Mm-hmm. Ryan mentioned that in the beginning, like it's been busy for us this week because we're onboarding so many clients, because we want to know what makes them tick. We want to understand who they are and what their goals and objectives are, because we know we have to adjust the deliverable that we've built that's hopefully standardized in some case to be able to make sure it meets them where they're at. Because if we don't, that's where the client is going to get frustrated. And that's where they're going to want to look for someone else, because we haven't made that point to be able to connect with them in the right way, so that the reports, the information we provide to them makes sense to them, but also meets their vision, meets their goals and expectations.
Yeah. I think so another problem that we have is that the kind of personality that's generally attracted to the accounting profession is usually different from the kind of personality that's generally interested in entrepreneurship, right? So I don't mean to blanket statement here, but accountants usually like to be on their own. They like to be quiet, and they like to put their headphones in and do some some sort of focus time. Whereas an entrepreneur is out shaking hands and networking and meeting people and making it happen. And so I think the issue is that the entrepreneur is constantly creating change, and the accountant is constantly trying to stabilize, right? And so if the entrepreneur's out there changing business models, I just got an idea, we're going to add this thing. Well, that just changed everything in terms of the reporting structure, what's expected, when it's expected. And I think it's on the accountant. I think it's more the accountant's responsibility to have his or her antennas up and say, some things are different. I better go back and have that conversation again. What's important to you? What do you care about? But unfortunately, accountants aren't trained to have those relationship conversations. We're not generally great at it. So any thoughts there?
Well, I think we have to understand the why we're not great at it and why this has happened.
And we are fantastic.
We're amazing.
Well, good at it.
But this is
accountants in general.
But this is where I go back and say, look, when IgniteSpot first started as a company, offering a bookkeeping and accounting service as an actual company, not some little old lady sitting in the basement, actually having that as a thing, that wasn't something that was going on. And in fact, I was, back in those days, I was a tax accountant in the compliance world, and we looked down on anyone who does what we're doing today. Like, it was terrible. And so what you've got is you've got a major shift that's happened over the last decade. But what you have is a whole bunch of compliance accountants who are now trying to do what accounting and controller and bookkeeping and CFO services are supposed to be, but they've been trained to be compliance and tax and audit. And so, no, we just check our boxes and do things the right way and give us our stuff so we can do our job and spit you out your report. That's what we're dealing with in the industry, is a whole bunch of people who come from that mindset. And 80% of the issue with clients and entrepreneurs is actually on the accountant creating that value that Dan was talking about. There are 20% of entrepreneurs, you're bad. You're terrible to work with. You're horrible. And sorry, but we don't, because you don't want to play ball with us at all.
Well, I want to talk about that person.
Yeah.
Right? Some entrepreneurs are bad at this.
Yeah.
Just horribly bad at it. And some accountants are bad too. So we're gonna be fair here on both sides. But on the entrepreneur side, we've seen people come in who are moving 1,000,000 miles an hour, who are incredibly degrading to other human beings. So they're pretty much solipsistic. They think they're the only person in the universe that exists, right? Like, it's just me. You're here to serve me. Get out of my way. I'm paying you a monthly premium, so just do your stuff, shut up and sit down, right? We've had people like that have just come in and are just crushing people. I mean, I've had entrepreneurs stand up and to their team, not to us, but to their team, just point them out and tell them how stupid they are and how bad they are at their job. This is the kind of person that is not going to be successful in any relationship, especially one with an accountant. But on the accountant side, I think this is where the accountant is really bad at his job. So how often have you guys heard this? An accountant is meant to be closing the books and has to get information from the client, because that's a normal part of the relationship. I got to get information from you to know what you're doing. And the accountant says, well, I emailed the client 3 weeks ago and I'm waiting. So I can't close the books because I'm waiting for a response. They sent one email. And so the accountant checked the box and now is waiting. And I don't know what they're doing, watching The Office and playing in Excel. I don't know what they're doing. But now the books are 2 months behind. But the entrepreneur is running 1,000,000 miles an hour. So they get 300 emails a day. If they missed your email, they don't know about it. So sometimes accountants are really bad at follow-up and being persistent.
You both look at me. I love it. Yes, yeah. I agree. We're terrible. No, I mean, you're absolutely right. And that's part of the introverted nature you see in some accountants. I mean, I look at the three of us at this table and I say, we're weird. And we really are in this industry, because I actually enjoy talking to clients. I enjoy reaching out to them. I enjoy helping them find success. Boy, even some of our staff do not enjoy that. They really don't. And okay, I did my job. Okay, that part of my stressful day is over. I reached out to the client, whether they responded or not.
Well, you made the comment at the beginning about people who like meetings. I like meetings because I want to talk to people. I want to understand your problems. I want to understand what's going on. I want to figure out how we can make them move forward. And so I definitely understand that too many meetings is a bad thing, and I totally own that. But I think that's the big part of it for me. To both your comments, being weird in that aspect also creates opportunity for a better relationship. And I think that's one of the parts that we've always tried to focus on in our firm. And I think that there needs to be a shift in understanding from both parties. The entrepreneur and the accountant this is how we meet in the middle, is by being willing to understand their story, being willing to really appreciate what they're trying to do, and then work together. And I think that's the part that we have to find that balance with. And I think that's the part where we try to spend a whole lot of time is we just want to be able to figure out what the system needs to be for us both to be successful. You want something from me, I want something from you. How do we build this on a foundation of appreciation for what values we both bring to the relationship? It's not just a transfer of money. I'm buying goods and services from you. You're buying goods and services from me. Great. That's all we're doing. Like, it's not just a transactional relationship, because there's too much that both parties need from each other for it to be like a grocery store experience where you just pick it up off the shelf and walk out. Accounting and business owners, the entrepreneur, it's way more complex than that, because they need each other.
Yeah. Yeah. Speaking of having personality, I'm liking your socks, man. Dan's rocking the Raisin brand socks.
Yeah, these are awesome. Bright, nice and bright and purple.
Just super bright purple. Raisin brand. I love it. So all right, let's bring this together then, because we've talked about a lot of problems on both sides. How do you actually make this work? So let's go through what probably an appropriate meeting should look like for an accountant and an entrepreneur. Like, how do you structure this meeting so that we actually get both parties' needs met, right? And we can get our jobs done, because that's all both people want. The entrepreneur wants to grow, the accountant wants to close the books. So let's take the odds away. So I would say first and foremost, it's on the entrepreneur's plate to come to that meeting prepared, right? To know where you stand in the close of the books and to know exactly what you need, and to be respectful of the fact that the entrepreneur is really busy and really stressed and doesn't have time to do your homework, right? So if you throw a bunch of homework in an entrepreneur and say, I need you to get 18 invoices for me, and I need you to find these bills, and I need you to call these vendors and figure out what's going on, and then I need you to like get some W-9 from somebody, and on and on and on, right? All the accountant is doing is passing the dollar back to you or the buck back to you and saying, do my job for me, right? There are some things entrepreneur can help out with, but really you should have access to the invoicing system and the bill system and the tax system, and you should be able to get those things or have a system in place to do it. So let's start with that first. Like, what does the accountant need to do to show up prepared?
I think the first piece comes to when you first engage with the relationship between each other. Mm-hmm. Whether you're an employee or whether you're going through an outsourced solution like us, both parties need to understand how they're going to work together and how those meetings that they have are going to flow. To your, you made the comment about sending them a list of things to do and then get back to you. They don't have time for that. There's some that do, and there's some that appreciate it. And so if you understand that in the initial conversation, that if I send this person an email, they're going to respond back to everything that I need on it, well, great. Get all of the ticky-tacky things out of the way, coding, all that other stuff out of the way before you get to your call, because the call should be completely value add at that point in time.
That's good.
There's no reason why you should be talking about transactions in that position, because you can get all that information before. If it's an entrepreneur that's running with their hair on fire all the time and they can't go through that, you have to talk about system to be able to make sure that you can get the information you need, so that that transactional portion is only a small bit of the relationship and that call and that interaction. Because if not, they're not going to see the value in you, and then you're gone. They're going to find someone else. And so there's an appropriate amount of balance with transactional touch point in the call, but it cannot take over the whole part. It has to push back to that value proposition, understanding the financials, understanding where the business is at, and being able to communicate options to them based off of what's happened.
Yeah. So I think if you're the accountant and you mentioned coding. So for people who don't know what that means, what's coding?
Coding is getting all the transactions from an organization that's happened. So this is your credit card, your bank transactions, your bills, your invoices, all that, and being able to report it correctly in your financial statements. So someone's going on a business category. Yeah. Chart of accounts is what accountants like to call it. But this is just where you put things into the financial statements so that it makes sense to you. The story is accurate.
So if the business spent $50, is that meals and entertainment, or is that insurance? Like, what? That's coding, right?
Correct.
Where do I categorize this thing? And accountants don't always know, because we're spending sometimes thousands of transactions a month, and some of them don't come with the supporting documentation they need. So accountants bring these things to the meeting, sometimes 50, 100, 200 transactions, and the meeting with the entrepreneur simply becomes let's review pages of transactions to figure out what goes where, right? And that's frustrating. You're saying that should be done beforehand.
I think that definitely that should be done beforehand. And I think a lot of it stems from the accountant should be comfortable researching some of that information.
Yeah.
There's a lot of context you get from that transactional data that comes through the bank feed or through the bank account or credit card that says, this is what this business is.
Yeah.
This is what context of it. Well, it should be able to give you direction on where you should post those things. If the client doesn't like where it's posted, that's fine. You should be able to be comfortable reviewing those with the client to say, here's what we've done this week. This is where we posted all these transactions. Thumbs up or no thumbs up, and make sure that the story makes sense in what's being done. But that's not every transaction, right? Like, if you have the same series of vendors, the same series of customers on an ongoing basis, that list should be a whole lot smaller that you guys are talking about on a regular basis, because everything else should be consistent in how it's being reported.
Okay, Ryan. So have you ever had a client because you're the CFO for lots of businesses, You ever had a client tell you the accountant or the bookkeeper is just putting stuff in the wrong category? My financials don't make sense.
All the time.
All the time, right? So that's a normal thing, right? And that happens because, let's be honest, there are thousands of transactions moving through your business every month. And it's probably feasible that the bookkeeper is not going to understand every one of them. Now, the entrepreneur always says, can't be that hard. I sent money to Google. That's a marketing expense. Maybe it might be for your email accounts. It might be for your security system. There's just 1,000 ways that these transactions can go. And even though the past 18 have been Google PPC, this one might be for Google email, right? And it's very possible that we're going to get something wrong. So there's also a responsibility on the entrepreneur to take a breath and know that it's okay to put your 2 cents in and say, actually, this needs to go over here a little bit. I mean, I'd love for you to speak to that for a sec.
Yeah. And so ultimately, whose fault is it? Everybody's.
Yeah.
And so that's where we actually have to be honest and say, sometimes it is on the accountant. Sometimes the accountant gets lazy and says, well, this is this number and it goes in here. Well, what if that dollar amount is different than what it usually is for Google? I always say a really good accountant is a curious person. People who are curious do really well in accounting because they want to understand why things work, why things don't look right, why things should be different, so that they can come to the entrepreneur with some thoughts and ideas and saying, I was noticing this on your set of books, instead of just what we call as the dump and go, which is, it's all here, just dump it in and go. Now, the entrepreneur on the other side has to take some ownership of his own financials as well and actually take a look at it and say, what makes sense to me and what doesn't? Because it's not uncommon for me to have a conversation 6 months after the fact, or it's tax time and now they want to look at their financials and understand, well, why couldn't we have had this conversation 6 months ago when everything was fresh and people wanted to sit down and talk to you about these numbers? Why couldn't that happen? And so it's really on both sides.
One of the biggest complaints I often hear is the entrepreneur will say, I have done that. I've sat down and for the first 6 months of closing books, I was super patient. But I have said the same thing to my accountant. I've told him or her to class this over here for 6 months now. They keep messing it up. I'm getting angry, right? And I think that's valid too. I think the accountant needs to be present in that meeting and take some notes. But the entrepreneur also needs to understand too, there needs to be some leniency because you're changing a lot. You're moving, you're shifting, you're building, you're growing. Things are always malleable, right? So I think there needs to be some grace there, but also the accountant needs to be taking notes, right? And say, well, I understand. I've got a rule book in place here.
Yeah, I think you make the comment about the rule book. I think that's a part from the accountant side that has to be better managed on what the rule book means. Because sometimes it can be rules that you set up in your financial system, your ERP or whatever it is, meaning when an invoice is created, this is where it represents on your financial statements. This is the items. When we do bills, this vendor is always going to be this, or this is where the variable is. There's a lot of systems and a lot of rules you can put in place in those softwares that you work with that help facilitate that. But also to the same point, they have to be monitored. Because if they're not monitored, this is where clients get frustrated because you didn't update it after you had that phone call. To your point, you didn't go back into the system and make the change and adjustment. You just assumed the system was going to do it automatically because you changed one transaction that you discussed. And this is where I think it's actually super important for accountants to understand the tools they're using. If you do not understand the tools you're using, you're not going to be as efficient as you should be, but also you're going to have a lot more questions for that entrepreneur that's going to frustrate them that they've already answered before. Yeah. Because you didn't set the system up to support both of your needs in how things should be working. And so I think that also goes back to it. The accountant has to take some ownership over their work product, which is what the client's asking for. They need to be able to really connect with that. If not, clients just going to be frustrated at the end of the day.
There's some craftsmanship there,
100%
from the accountant's perspective to actually care about the product. The problem is we've got so much technology now, like you're saying, that has made the accountant's job, I wouldn't say easier, but it's more streamlined because we can import data into your bookkeeper file now, and it will even say, "Oh, last time you spent money on Google, you put it here. Cool. The software will code it there again for us, right?" And I think the accountant can easily get lazy and just let the software do all of the automatic coding for him or her, and not review it and not ask questions and not be curious. So this is what the accountant needs to do. To come prepared to this meeting, Sure, use your technology, use your tools, but hit pause. Look at the stinking numbers. Ask some key questions and say, and think about like last time I met with my boss, we had these conversations. Are the financials reflective of those requests? Or did I completely ignore them and just hit import? Here's the report, right? Yeah. That's a big problem. I think the entrepreneur, they'll also, what I found is after 6 months of being patient, the entrepreneur loses interest in those meetings, starts to not see value in them, and begins to miss those meetings, doesn't show up for them. Now the accountant is left on an island, and it just gets worse. It's a downward spiral. And 3 years into this relationship, they're way behind on their books. Everybody's frustrated with everybody. And so I think it's important for the entrepreneur. Well, we talked about the accountant showing up prepared. I think the entrepreneur needs to show up interested, right? I think the entrepreneur needs to show up and like, because look, you're all growth people. You are trying to grow your business, and your keyword is you want to invest in growth. You need to look at your accountant as an investment. So if you can see this person as a way to improve the wealth of your business and get some ROI, show up and care. That's what we need.
Yeah. And I think we've spent a lot of time talking about where the accountants are failing. I mean, entrepreneurs, this is where you fail. You don't show up. Yeah. You don't dedicate time to this. And you aren't that interested. Yeah. And you don't understand what the financials can actually do for you.
Yeah. They're not curious either. Mm-hmm. They know they're supposed to have accounting, but they're not asking good questions. They're not curious as to why their business makes money or how their business makes money or what they can do to improve that cash flow process, right?
Right.
They're very keen to, if something's wrong, just blame the accountant and say, my reports are wrong.
Well, what do the entrepreneurs care about? I go back weeks ago to when we were talking on one of these podcasts, and we talked about the entrepreneur who's sitting there saying, I'm just trying to grow my top line. Well, they can see how much sales they've had at any point in time. And they can look at their bank account and say, there's money in the bank and I've got more sales. Great. Well, guess what? There's a lot more to it than that. And you're stepping over dimes or stepping over dollars to save dimes, because you're not willing to look at your own books and understand how your business works. You just care about revenue and how much cash is in the bank. Yeah. How much more money could you make? What are the decisions could you make to actually make yourself more money and to be more valuable to yourself, your wealth, your family's wealth, whatever it is? You're missing opportunities because you won't care. And that's important to understand. A successful business is not a business that just grows fast and has high revenue.
No, not at all. It's a business that goes out of business.
Right.
There's this really fascinating topic, as you're seeing about this now in psychology. It's called bounded rationality. And it's the idea that as human beings, when we're presented with a lot of information, we rarely pick the option that's the most optimized for us. We usually satisfy. So we just like satisfy. We go with good enough, right? And that's because we're limited as humans. We get like brain fog and mental fatigue. We've got like decision biases we've built up over our lives. This is how we've always done things. So we're going to do it that way. And I think entrepreneurs, when they come into this meeting, are suffering from some bounded rationality. They're not optimizing their financial situation. They're not asking critical questions. They're just satisfying and getting through the meeting so they can go back to stuff they're more interested in. I'm sorry, but I can't understand why you're not the most interested in working with your finance person to make more money. That's why you're in business. This should be the most exciting meeting of your month, right? Like you should be like, oh, good. Okay, we're gonna fix some stuff. We're gonna make some money finally because I'm tired of being broke. Yeah. Right. That's what that meeting should be.
It's your personal report card.
Yeah.
It is your grade. Are you an A, a B, a C, a D? Yeah. How are you doing as an entrepreneur? It's your report card.
Yeah. And I think not to poo-poo on the accountants, even more, but like that's where their responsibility is to show up with the ability to do that.
Absolutely.
Like if both parties are not showing up with the same intent, there will always be disparaging relationships. You will always have conflict. Yeah. That's where people get frustrated. That's where people walk away. And so I think this goes kind of back to the investigation or the choosing aspect of it. Both have to vet each other really well before you even start a relationship. You need to understand what it is that we're trying to accomplish, what your goals and what your expectations are. Whether you're using an outsourced accountant or an in-house accountant, what are we trying to do with this? If it's trying to grow and scale effectively, great. This doesn't mean we're just putting cost limitations in place and the accountant gets to manage cost limitations. No, it's the accountant has to be willing to understand where is this company going and what are the key pieces that play into getting there. understanding the cost structure, understanding where their revenue generation is coming from, all those different things. And then the entrepreneur has to show up and say, okay, great, there's compliance expectations this person has from me. How do I make sure that they have the context to be able to make their reporting better so I can make better decisions? What do I need to provide to them to make sure that our interactions are valuable instead of a waste of time? And when you both meet in the middle in that context, you kind of create a really awesome symbiotic relationship.
Yeah.
Like, you have to survive with each other. Like, one cannot stand alone. Like, they just won't.
Well, I talked about how the entrepreneur needs to show up excited. Well, I think the accountant needs to show up understanding a very specific thing. Everything, accountant, I'm talking to you now, everything you've done for the entire month means absolutely nothing until you get to that meeting. None of it matters. Closing the books, reconciling the bank accounts, none of it matters until you can translate that information into the decision maker's hands so that something can be done with your work, right? You have to be able to tell a story. Ryan's always talking about a story. So if you simply just give the entrepreneur a bunch of reports and a bunch of homework, of course that meeting's not going to go well. But if you come with a story of how the business is doing, what you're seeing, and you use your education to be intelligent in that meeting and say something useful, then the entrepreneur is going to want to be there with you, and they're going to find value in that.
No, our job's just to get it done so they can get a tax return done. That's all we do.
I do like how you said, Dan, that like you need to vet each other, because we were onboarding a client yesterday, a really big nonprofit. There's this beautiful organization that helps families find housing after domestic violence and what have you. It's just this really fantastic thing. But the person had mentioned on the call that she was scared because she had gone through several accountants and had been burned and had been mistreated. And so much so that their current accounting firm is just being awful. Like they won't give them access to the accounting platform or the files. They can't get in to look at how things are going. It's just a terrifying thing. And so she's rightly so really nervous about any new relationship, right? And so she's looking at us not just from, she's really smart, not just from like, how do you do what you do? She's trying to like see, are we like the right personality fit? Like, can I sit in a room and go to war with you, not against you? If you think about it, like when you're hiring an accountant, you need to be like, because you go to war every day as a business owner. It is like full on battle sometimes, and you just picked a commander to stand next to you, right? That's a really important person, and you better like that person, man, because if not, it's going to be awful, really awful. But it goes the same way. We have clients that we have not meshed well with, and we've fired clients, not because we don't like how they do what they do, but they're just rude. They're just mean people. So we just say, love you, see you, off you go.
Well, and I think for us, it's we take a different approach. To your point about this client that you were onboarding yesterday, like our approach really is like, we want this to be a good relationship.
Oh, yeah.
We want both parties to feel like this is a mutual beneficial situation. Whether you're a low touch client or a high touch client, we need to make sure that we understand that piece. But if you're going to treat our team with disrespect and yell and scream at them,
you can leave.
We're not comfortable with that. That's not, there's other firms out there that will be totally fine with it. If that's the type of relationship you have, make sure you find that person.
Yeah.
If you're not, and make sure you find the people that mesh well with you, like people who are, our success usually comes from clients that are wanting to actively participate in our relationship, who are not afraid of us working towards a goal of efficiency, who don't expect it on day one because we understand there's a learning curve for both sides. Yeah. But it's people who really do want value out of the relationship. They want a communication. They want a relationship of understanding. That's the clients we find that we're really successful with, and we vet that as a part of our onboarding process for sure.
Yeah. I don't want this to turn into a nice spot commercial. This podcast is not meant to be that. But what we're trying to say is that you have to vet the relationship. I like what Dan said. That if you're the kind of entrepreneur where you just want to go in and smash and grab, that's fine. There's nothing wrong with that. But there are certain accounting firms that will work well in that nature. We're not that firm.
Yeah.
Right? We're just not. But I definitely know some firms that are. They like that environment. They just want to be told what to do. They want to charge in 15-minute increments and get their bill done. And they want to send you the reports and go on. That's it. It's fine. I have no interest in that relationship.
Yeah.
Okay, gentlemen, anything else you want to say about, I have one last question.
Please.
How often should the entrepreneur and the accountant be meeting? Let's talk about cadence and frequency, because entrepreneurs have limited time, and how long should those meetings be, right? Every business has what I always call a heartbeat on my sales calls, because your business has this specific like EKG going on, and you need to sort of tune into that and meet around that system, right? I don't know, what's your thought on this?
That's a really tough question to answer, because every business is different on how they're functioning, how they're working. Every business is different on who's doing what in the relationship. If we're talking about an outsourced accounting solution or an accounting solution that you're doing everything, so we're talking invoices, payables,
we do,
all the things that we do, at least at the basic, at least twice a month. And the part that I add to that
that's
piece,
the basic program.
100%. The part I add to that is, if you have a team, and this is how we, again, not a sales pitch, but how we structure ours, we have people who provide specific services depending on your package. That might be 2 meetings a month with each person that's providing a service to you. So if you have a bookkeeper, an accountant, and a controller, that may be 6 meetings a month. It doesn't mean it needs to be 12 hours a month of conversation. That's not what we're suggesting. Those meetings should be very valuable and very focused on what that role of that person is. 30 minutes is what I try to target in that conversation. At minimum, they're talking at least an hour a month that's split out into two different separate, situations or circumstances.
And you said it's not required, right? Because as an entrepreneur, I hear, you want me to meet 6 times a month with my, heck no, I don't have time for that. But I think some businesses require that because of the type of data you have, right? And you've just built a very data-heavy, data-intensive business where you're going to have to plug in with these people, or else your reports are going to be wrong. Most businesses, though, I think if the accounting team can figure out how to do most of what they're doing and clue in so that we're connecting with the client twice a month and having 2 valuable conversations. Okay, here's how you're doing. Here's what we're seeing. Here's what we need to do to improve. Here's the reports that are meeting your outcomes, right? That's a really valuable conversation. We do want to prevent the bookkeeper getting on and doing transaction level conversations. The bookkeeper should do that with the accountant on the team or something, right? Hey, let's meet outside of the entrepreneur's time. Let's deal with that stuff. But sometimes the bookkeeper has to get on and talk, Nobody knows because you just brought on a new vendor. We don't know what this vendor is. How do you want it handled? That's okay.
You just started selling a new product line and you change your contract management. Like all that kind of stuff is super valuable for you to communicate with one another. But
we need to keep those meetings short.
They need to be appropriate for the context and content that you're going through.
Yep.
And I think by doing that, it allows both parties to really understand how the relation, like when you show up to that meeting, it cannot be a waste of time because you're not down the hall. You're not in a position where they can just wave a hand and say, come take care of me. It's something that when you both show up, you have to have your list of things that need to be addressed and the value propositions you're both bringing to each other to be able to make sure that you both can be successful.
What do you think, Ryan?
2 meetings per week minimum. And that's where I look per month. 2 meetings per month is something that you should actually plan on as an entrepreneur.
You should look forward to those 2 meetings, right?
Right. And if you don't, this is where we get to start pointing the finger at you saying, well, you didn't invest the time necessary to understand what your tools are creating for you. You need to be able to dedicate 2 times a month to come prepared for a meeting so that you can actually be of value to your accounting team and get the reports and the value you're looking for. Everyone's going to be a little different on up or down, but as an entrepreneur, you should be willing to commit 2 hours of your month to meetings with accountants.
It's not bad. No. Yeah. And again, if that's a meeting where you're making the business wealthier, those should be an enjoyable 2 hours. I think it's important to point out, though, that you should block out an hour of meeting, but please, accountants, if you get through all of the material quickly, it's okay to end the meeting before the hour mark. Just because it's on the calendar for an hour doesn't mean you have to sit for 60 minutes. If you can get that in 15 minutes, great, that's fine. Everybody's keyed in. We know what's going on. Reports have been discussed.
The thing that I'll add to this, because I love what you guys both are saying.
Because we're smart.
Yeah, 100%. But I look at also situations. I think this is important for entrepreneurs to understand with it as well too. Like depending on the complexity of your organization, you might divide that up differently. We have clients that we work with that are larger organizations that have a lot of moving pieces, 10, 12, 15 plus businesses they're working with, where we have someone on our staff that's dedicated to just payroll. That payroll person in most cases doesn't need to talk with the entrepreneur every single week. They need to talk with the person who's managing that internally within the system. And I think that's a part that's super critical with this is you just need to make sure that the relationship is a valuable relationship between whoever you're working with, whatever services you're getting, whatever structure you have set up, because that's really where you start to create for the next person that's showing up to the meeting with the entrepreneur. Well, we already took care of this. This is going well. There wasn't any questions, or this is the one thing we need to get answered that neither party could answer earlier in this week. Let's get clarification. And that communication creates a lot easier movement for the company to be able to grow and move forward.
Yeah. Well, gentlemen, I think that was a really good conversation. I think it's a fascinating group of personalities. Two very different people pulling in different directions with different agenda items. We're supposed to like each other and get good work done, right? That's a hard thing to do. It's important to know, entrepreneurs, that if you worked with your accountant for, I always give everything in my business 6 months. I always give everything a solid 6 months before I make any judgments. But if in 6 months it's very clear that your accountant isn't working for you, it's okay to shift, get a new accountant. That's fine, right? But don't change accountants every 30 days just because something's not right. The issue might be you, right? Give us some time, but that's important. And I think, is there anything else you guys want to say on this?
I would just in a nutshell say, look, the accountant has to be skilled, but both people, as I've listened to this conversation, both parties, the accountant and the entrepreneur, they actually have to care. And that's really what the whole message is that, look, accountant, entrepreneur, care about this. Accountant, actually be competent in what you do. And that creates the relationship we're looking for.
And I guess my last piece with it is understand what the outcome expectations are. Both parties need to understand that. Before your relationship can be successful, the entrepreneur needs to understand what the accountant can do, and the accountant needs to understand what the entrepreneur is willing to provide. And do those meet with the same outcomes? Do we align in that same piece? Because if you don't, if both one of the parties has higher expectations of deliverables, the relationship will be convoluted. It just isn't going to be successful. It's going to struggle.
Okay, my final thought is sort of interesting. Because again, I'm in charge of sales and marketing, so I always have the first conversation with people when they come through the door. And they usually have somebody there that's a controller or a CFO. This happens all the time. And as I dig a little deeper, the controller or the CFO is actually somebody that started off as the receptionist, paying some bills, and just kind of took over some admin work and now calls himself or herself the controller or the CFO, right? They've dubbed themselves this title. And so there's a real big disconnect between the experience and the education level people have versus what they think they have. And so when you're working with your accountant and you're ready to hire a new accountant, or you're frustrated with your existing one, start by asking yourself, did you hire the right skill set? Because chances are you probably hired lower than you thought and they inflated their resume, or you hired exactly where you knew they were and you just sort of gave them fancier titles because they've been with you for 7 years, and now you're frustrated because the financials are a total mess. So start with that too. Look at who you actually have working for you. And with that being said, if you are interested in having Ignite Spot potentially be your accounting solution, the best way to do that is to go to ignitespot.com, and then up in the top of our website there, we have a little button. Click that says get a free review of your QuickBooks file. That's the best place to start. We do some free work for you. We get in, we look at what's going on and do kind of a tune-up just to see how healthy things are. So start there if you're interested. And other than that, thanks for watching. We'll see you all next week. And remember, stay profitable.